Hello everyone, my name is Sarvesh Painuly and today I will give my presentation on the subject corporate accounting, and my topic is based on other level findings limited. And firstly I will tell you some introduction about my company. Other Level Limited is based in Australia and the company's subsidiaries in the UK and US as well. The company's tax matters are complicated due to the different tax rates and the legal jurisdictions in which the company and subsidiaries are located. This presentation will disclose all the tax reporting and the compliance matters as well as the applicable laws which the company have to apply on the tax policies and the disclosures related to the tax holdings of other levels holdings. Income tax in Australia is payable by all the companies as a rate of 30%. It means like if a company is earning like 100%, they have to pay 30% as a tax. There are a number of issues that compliance matters for companies and groups of companies. It includes accounting, reporting and compliance requirements related to the current and the different taxes. This presentation will also discuss such tax matters as well, like how much the company is paying to the government and which rates they are paying. This presentation contains data from the company's annual report, which means my presentation is for other level findings and I will include their final tax report. Firstly, I'll tell you about the level of profit. There are two types of profits. One is accounting profit and second one is taxable profit. The difference between these two is very important. Like accounting profit, it is calculated by subtracting all the expenses from the revenue, and the taxable profit, it is subject of tax. It means like on which the company is paying tax, it is a taxable profit. And accounting profit, it is not the profit as entity gets from the subsidiary cost during to the business from the revenue of the entity. And taxable profit, it is also known as adjusting gross income. It includes wages, rent, etc. In the next thing is different types of tax assets. There are different types of tax assets as a result of the difference between the tax paid and the tax payable to the government. For example, tax payable of an entity is 200 million and the taxable. The next thing is deferred tax liability. Deferred tax liability is the tax amount that an entity owes to the government and the tax authority. It is the difference between the tax payable and the actual amount of tax paid to the government. It also raises as a result of the timing of the tax occurred and the time when the company made the tax payment. Deferred tax liability is the amount that an entity owes to the government and tax authority, and the entity will pay it in the future. Calculation of the deferred tax liability, it is calculated as the tax rate multiplied with the taxable income of the entity. Deferred tax liability is also referred as the underpaid tax. This outstanding tax amount has to be paid in the future to the tax authority. The next thing is, it is stated that taxable temporary differences of the recognition criteria for deferred tax liabilities. There are various deferred tax liabilities recognition techniques which I will discuss. The first one is liability arising from the initial recognition of the goodwill, and the second one is liabilities that arise from the initial recognition of an asset or liability other than a business combination, as this does not affect the accounting of the taxable income of the entity. The third one is liabilities arising from the temporary difference associated with the investment in subsidiaries. However, only the extent that company can control the timing of the reversal of difference, and it is probable that the reversal will not occur in the foreseeable future. Other level holdings private limited policies related to the tax. I will discuss what are my company's taxable policies. The first is the company has disclosed the tax rules that comply to it in its note to the financial statements. The company has noted that income tax expense or expense in the amount which is to be received or paid to the tax income of the current year. Tax expenses and benefits of the other level holdings are: the income tax benefit of the company during the year was like $5,500. The company claimed this benefit because a loss was incurred during this period. In case of any profit, the company would have had the income tax expense during the period. The income tax benefit has two complications. It can be settled against any income tax liability brought forward from the previous period, or other, there is no deferred tax liability against which this can be claimed. Then this is carried forward to the next period. If carried to the next period, the unused tax loss then settles against the future liabilities. Cash flow against taxes and tax benefits. I will discuss the amount of tax flow and the cash flow which other holdings company has occurred. The company has paid not cash against the tax because it has no liability for the year ended 30th June 2019, which we can easily see in my assignment, or the previous year. The income statement also shows a tax loss carried forward. It means the company might not have an income tax payable during the next period, as well as because any income tax liability will be settled against the carried forward losses from the year. However, the company has disclosed cash received as tax refund during the year against government grant and the research and the development concession. It is very unlikely that the tax office will pay a tax refund. However, the amount should be contributed to the government grant received. As can be seen from the my assignment, the company had recognized a tax received of like 76,000 during the period. The amount received as a cash during the period, however, is more than 76,000. The difference in the amount can be due to the number of reasons. Maybe the company had a receivable grant which was occupied with this amount, or maybe there could be some other reasons as well. However, this can be only confirmed from the annual report of the company while the ending of the year. Conclusion: the other level holdings limited has complied with all the reporting and the legal matters with regard to the tax. The annual report disclosed all the numbers and the policies relating to the tax expenses, current tax benefits and the deferred tax assets, along with the necessary disclosures and explanations. Hope you get all my explanations, and thank you so much.